Hey, everybody. Josh Kelly, Citadel Benefits Group. I'm excited about the Zoom today here with Mike Feltman with Assurity. He's our regional wholesaler. He's home based in Orlando and covers the Southeast region. Of course, no matter which region you're in or what state you're in watching this, everything it works the same. He's just our guy. So the purpose of this video is for us to go over the individual stuff. Obviously we run a lot of business with Assurity on the group side, but in every group, in every situation, we have opportunities pop up for individual business when we can't go more than that certain number on the GI with that. And Surety is a great partner for that on the individual side as well. So he's going to walk us through how the systems work, how to quote, navigating the sites, and then kind of hit some highlights of some of the products. And if you want any more detailed stuff, obviously we can get with Mike later and get you some individualized training, but this will get you a good start. So that being said, Mike, the floor is yours, my friend.
Thanks again for kicking that off, Josh. And yeah, we're just kind of getting started here. So, like you already laid out, we're just going to kind of do the foundational stuff today. And then, as opportunities arise, maybe you have that discussion with an executive that you're doing benefits planning for as an employer, client, anything like that, looking at more big, complex type scenarios and strategies and everything. We can go ahead, huddle up, and we can get a little bit more deeper dive on that specific situation and what that solution is going to be for those clients. But we've got a lot that we can kind of dive into dive into today anyway. But what we're really just going to do is set the foundations, make sure that you all are comfortable and familiar with how to use the different systems, the processes, procedures. Basically, once you have the business, you're going to want to know how you can write that business, and that's what we're going to go ahead and do today. So where we're starting out right here, this is the login page for assurelink.assurity.com. And what this is this is your home base. This is your secure agent portal that's going to allow you to access things like the product guides, underwriting guides, marketing pieces, my business portal where you can track your pending business. If you had a big case and it's above our accelerated underwriting limits of $1 million, well, those are going to go through full underwriting, have an exam, maybe a telephone interview, and you'll be able to track all of that through the My Business page, along with your commissions, your hierarchies, if you have some recruiting of your own that you do. So I'm going to go ahead and sign in here, but before I do that, I do want to show you how you can create an account. I've gone ahead and done this with Josh and his team already. So the back office Citadel team definitely already has a good familiarity with how this all gets set up. But really, what you would do is once you get contracted with us, get that four-digit agent ID, you're going to be able to then create your account. And you just come here at that assurelink.assurity.com address, click on the create an account where you just saw me click there in the login box. And then you're coming in here and you're just creating it pretty simply. You're going to, your username can be anything like mine. It could be M Feltman, it could be MI Feltman, it could be M Feltman 7, whatever you're most comfortable with using as a very memorable username. You can go ahead and use that. Email address, we do want you to try to use your business email address that you submitted on your contracting. So it kind of matches up there. And we know that all the communications are going to the active business email address for you. Password, pretty simple parameters there. And then you're going to want to do an agent account because this is going to be your individual agent profile. If you do have a agency yourself and you're actually contracted within the Citadel hierarchy as a corporation or an agency, that's the only time that you would go ahead and build an agency account. But otherwise, just for your own writing business, you'd build that agent account. You go ahead and click continue from here. I'm not going to be showing anything because I'm a home office employee, and this is kind of where it says hold up right there. This isn't a real person trying to build an account. Well, you click continue. It's going to do a two-factor authorization ping to your email address that you provided right here. You enter in that authorization code to verify, and that's going to take you to another kind of fill in the fields type page where it's going to be asking for your social security number, your cell phone number, and then it's also going to be asking for that 4-digit agent ID that we went ahead and sent out to you with your welcome letter after we received and processed your contracting kit. You enter that agent ID right in there in that field, and then you're going on and continuing to another two-factor authorization. This one, you're just choosing what method you want to use going forward, whether it's your cell phone, get a text message, or your email address. You can pick either or there. And then once you two-factor authorization on that particular step of the process, your profile is immediately activated. And you should see this homepage right here as soon as you do that second two-factor authorization. And this is your home base for Assurity. This is your AssureLink portal where you can access things like I was talking about earlier, the My Business section, which would have production. I can't access it because I'm not currently signed in as an agent or agency, so nothing would be there. But ultimately, that's where you can see commission schedules as far as not just the commission grids themselves for you to remind yourself how much you're being paid, but also commission dates, when our next cycle is. And that is going to be twice every month. So you can kind of look at those as bi-weekly pay cycles. Then you can look at things like your production, your commissions, like I've been saying, everything that you would think to manage your business would be housed there in the purple triangle. But beyond that, you're looking at, your leaders conference tracking, or just trying to look at what the qualification requirements are. Since you all have been contracted here very late in the year, it's really not going to apply for you this year because we're going to Barcelona next spring. So you'll be looking out for communications on where we're going for 2026 and the qualification requirements of production for the entire 2026 year, which is typically going to be $90,000 in weighted annual premium. So that's total premium that you have placed in force during the 2026 calendar year. And then we go back home here. You can go into marketing and training, which is basically going to be where we house all of our marketing pieces. You'll find things like just our generic carrier trust and company trust flyer, where we go over we're a mutual company, where our policyholders are ultimately owners of our company. You have voting rights as a policyholder. So as a mutual organization and being owned by policyholders instead of being a public company, a stock traded company, we can focus on those long-term goals. So we're looking at things like that on this piece. Strong financials, going over our 454 million in total surplus, giving you a lot of solid confidence that we're going to be able to pay out our obligations on claims. But then you've got the all products booklet if you want to go over our entire portfolio. And then you can go in to the products individually and get a deeper dive on term life, looking for things that may cover, the brochure itself for the client consumer brochure, but also go into some things that might be a little bit more directly targeted, like mortgage protection, something that may talk a little bit more about our return of premium rider that is available. Because I know we are one of the individual carriers, one of the few that even offers a return of premium anymore. So we kind of bake that into a few of our marketing pieces, talking about, again, mortgage protection, millennials being a huge market for return of premium sale, and then, of course, a return of premium specific consumer flyer. Just very simple things that you can kind of start the conversation with when you're going in and discussing these solutions with your clients. But we have these basically across all of our different product categories, and you would just kind of drill down, for example, disability income. We have our short-term DI product, our long-term DI product, graded benefit for impaired risk. So if they're declined from another carrier, it's very likely that we could accept them on this graded benefit product with a couple of additional, maybe exclusions, limited benefit periods, things like that. But that's a flexible product to pivot to. And then business overhead expense insurance as well. So that's how you would navigate within the actual marketing tab to get to the exact product that you're looking for. And then the shared items is more of the broad generic, hey, here's what DI is all about, and kind of talks about all of the products simultaneously anyway. So that is your marketing and training tab. If you ever want to order something, go ahead, send me an email, send Josh and team an email, and we'll be able to get those shipped out to you. Pretty large bulk orders. We don't have too many rough limits as long as you're kind of in that, under 100 copies type realm. And then we get to the green triangle here, the product center. This is probably where you all are going to spend the most time, this and the marketing and training tabs, because this is where you're actually going in and learning a little bit more about our actual products, where you can go into the term life and learn, okay, what are the face amounts that we go from? Well, 25,000 up to 10 million. So being a carrier that does serve the middle market, anyone making $30,000 all the way up to $350,000 as our core markets, well, we allow those face amounts to go way lower than a lot of our competitors who are probably limited at, either 50 or 100,000 as their minimum face amount. We can go ahead and write that business and write it very quick and efficiently too, because we do have our accelerated underwriting limits of up to $1 million for ages 18 to 50, and then up to 500,000 for ages 51 to 65. So even though some of those cases may be lower premium, we know that you still have to run a business as an agent and agency. So we're going to try to make that a very efficient transactional process for you to get on your way and onto that next client and sale who you can service. But then you go into things like the product guide, being able to dig in a little bit farther into maybe it's the other riders that you're looking at, or maybe it's making sure that we do have an accelerated death benefit rider for chronic and terminal illness. You can go in and learn a little bit more about those. But then the optional riders, we've talked a lot already about the return of premium rider, which is filed as an endowment benefit rider, but this is where if you ever see endowment benefit rider in our materials, on our website, in the quoters, anything like that, just very simply know that that is the ROP rider. It's just under a name that is filed with the actual departments of insurance. But you can see things like the child term rider, other insured rider, adding on additional folks who are insured on this one policy to make it a family plan. Those are the very helpful items that you'll find in the product guide. And then also you've got the underwriting guides, looking at what the accelerated underwriting requirements are and kind of what those limits are. Or maybe you're wondering who's the authorized paramedical firm. Well, that's only for if you want to order the exam yourself, but by default, we're going to go ahead and do that for you. Again, taking another thing off your plate and kind of streamlining that business flow and that process to help you get that sale completed and over the finish line. So that's how you would essentially navigate the site. You'd be able to go in again, product by product. Whole life, again, we have participating, which has a 10 pay, 20 pay, paid age 65, and then full lifetime pay. Or you would pivot over to our other whole life product by going right under here and clicking on the single premium whole life. Really great product for an older senior who may be sitting on a bunch of idle assets. Maybe it's in a CD that's performing 1.5%, or even worse, maybe it's mattress stuffing money that's just burning away in a checking account, not really doing anything for them. Well, that's really good solution is going to be this single premium whole life. It is participating, so they're still being credited dividends. There's a really nice single premium paid up additions rider if you really want to juice it a little bit more in the early years, get it built up quickly. And then really the last market for this product would really be a 1035 exchange rescue out of maybe they have a universal life sold back in the 90s or early 2000s, illustrated at a 12% return or something crazy like that. And now it's tanking 20, 30 years before the projected maturity date that was initially sold. Well, that's where we see a ton of business as well for this product is they've got 5, 10,000 in cash value still in that dying universal life, pivoted over to a single premium whole life. It's automatically going to be paid up, no more further premiums, with a guaranteed death benefit that is going to continue to grow because, again, it's participating. It's going to be credited those dividends and can continue to grow over time. So really solid solutions there to kind of dig into. But then really just kind of digging into the broader markets that we're in with our DI products. I mean, we've got very specific occupations. A lot of folks think of us as kind of that blue, gray, and pink collar carrier. So we're awesome with nurses, dental hygienists, teachers, and then going down into that gray and blue collar. I mean, we're talking about first responders. We can go ahead and cover them. A lot of our competitors won't. Even a weapon carrying police officer, we have an occupation class 1A. They would just be in our riskiest occupation class, but we can still cover them, firefighters and the like. And then gray collar, that's really because we work really nicely with small business owners. So your electricians, your plumbers, your general contractors, those folks, we can actually take from that gray collar class, that 2A occupation class, give them a business owner upgrade, take them from a 2A up to a 3A, which would save them money, give them additional options for benefit periods and additional rider options, things like that. So those are really our main niches. But then we also have a couple of white collar niches as well, specifically with real estate agents, insurance agents like yourselves. And then the really big one that just developed this year, because a lot of our competitors in the white collar markets have kind of gotten out of this particular occupation. They're looking at dentists less favorably now, whereas we are actually staying the same, haven't raised prices on them, haven't changed occupation classes for those dentists. So we've picked up a lot of dentist business this year. So it really used to be our story that, hey, if you're riding a dentist, we understand that we're not the best carrier for that, but you've got what, 10, 12 different hygienists in that same office that you as an agent can go in and write within that one office. Well, now we can go ahead and say, go ahead and write us with that dentist too, because we just seem to be doing really well in that particular market and occupation these days. Those are the types of things that please feel free to reach out to Josh and team or to me directly, and we can go in step by step to really hammer down if you're in these markets, these kind of pink, gray, and blue collar markets, selling DI, selling critical illness. Definitely reach out and we can kind of go step by step to make sure that you're comfortable and familiar again with writing the business, quoting the business, and knowing that you're presenting them with a very competitively advantaged products for these specific reasons, selling them through Assurity. Not going to spend very much time on critical illness, accidental death, and accident. You're either selling these products or you're not. Not going to try to necessarily win anyone over today. Just know that with critical illness, ours is going to be an extremely robust coverage type option. It's not going to be a skinny down, just heart attack, stroke, and cancer. We cover 11 different critical conditions with this policy, including Alzheimer's and renal failure. So with that, if you have somebody who's looking for a little bit more comprehensive coverage from their critical illness policy, we've got a great one. It pays lifetime renewals on commissions, and even better, it's got a return of premium upon death other than a critical illness built into the base policy. So they're either getting paid out for a critical illness that they've actually come down with, so they're getting that $50,000 benefit lump sum paid out to them, or they eventually pass away due to an accident, due to passing away peaceful in their sleep all the way out in their age 90. And then their beneficiary gets all those premiums paid out to them because they passed away for a reason other than a critical illness. So that's a really powerful policy that is guaranteed renewable for life. So they can keep it in force all the way up to their age 80, age 90, age 100 when they're most likely to come down with a critical illness. But they still know that they've got return of premium built into the policy if they ultimately do pass away due to an accident or something not from a critical illness. Accidental death, great pivot from a term life decline. That's where we see the most business there is they were declined for a medical reason for term life or whole life or universal life. Well, accidental death is essentially not totally guaranteed issue. There are a few occupations that we will not issue to, like active duty. Military is the one that always comes up first anyway, but accidental death, great pivot for medical declines for life insurance. And then accident, great family plan type situation. You may already be familiar with this with maybe another health focused insurance company or someone of the like, but just know that we do have an accident plan now. It's just as good as our group accident plan that you're hopefully selling with us already at Assurity. Just know that we've got it individually as well, and we've got a shop down in Miami that over the last, what was it, the last 3 weeks of the enrollment period, they've sold 1,700 of these policies, and we've got 5 agents who are making leaders conference just during enrollment period. So exciting stuff with that. But bringing it back around to the core business that I think we're going to see in our initial partnership between Assurity and Citadel, the life insurance products. Really going to dive into the actual illustrations to show you some of those competitive advantages on the term life, the whole life, and universal life. But very broadly, I would say that what you're looking for on our whole life is going to be really, really solid options for low ages up to high ages, low face amounts on up. And then also, we do have a juvenile specific underwriting class, which makes us look really appealing for those juvenile cases, where our competitors, they may be writing most of their juvenile just on a standard non-tobacco underwriting class. We write them at their own specific juvenile class, which gives them a little bit of extra boost with their growth on the death benefit, but also making sure that they have some really good cash value in there around age 20, around age 30, whether they want to use it for supplemental college funding, or maybe it's that first down payment on a home. That's what we see the most out of what the goal is for a juvenile policy. So we kind of make sure that those designs look nicely when you're using that juvenile underwriting class for those folks. And then we talked a little bit already about the really core markets for the single premium whole life. The universal life, it is a current assumption universal life. So it does have some non-guaranteed rates associated with it. But what it does offer is very solid guaranteed side of the ledger on the illustration, where you can actually bake in a guarantee out to age 90. But ultimately, that's just showing a guaranteed rate where it's still a current assumption product. So on that non-guaranteed side of the ledger, you're looking at somebody in their 40s or 50s doubling that initial death benefit due to the current assumption rate that we are assigning to this product. So someone in their 50s has a $250,000 initial death benefit. Well, that's going to be guaranteed out to age 90 on the guaranteed side, but that initial $250,000 death benefit should grow under the current assumption rate on the non-guaranteed side to 500,000 by the time they reach life expectancy 25, 30 years later in their early 80s. So that's where this product fits very nicely. You have somebody who's looking for maybe a little bit less cost of premium than a whole life would, because whole life is generally a little bit more expensive because you've got really great guarantees plus that cash value growth with the paid up additions. But with the universal life, it's a little bit cheaper from a premium aspect. It's still got very solid guarantees that you can bake out to age 90 at the farthest, but it's also got very nice upside on the non-guaranteed side, but very conservatively illustrated still. So that's where you're kind of looking for the universal life. And then the term life, we've talked a lot about return of premium today. That is a major, major portion of our sales. We're talking about 35% of our term life sales are with that return of premium rider attached to it. So that should just kind of be proof in the pudding for you that we are extremely well priced in the return of premium market because we have such strong brand loyalty from those shops who have been selling return of premium with us over the years that we haven't really lost out on price from that aspect with our competitors. Most of our competitors have actually gotten out of the return of premium market, which ultimately leads to us still maintaining a pretty nice market share with that. And with the return of premium, I mean, you're looking at all different kinds of solutions there. It could be very simply, and most commonly, a mortgage protection play. You have a young couple in their 30s buying their first home, recognizing, yeah, I want to protect, my family and make sure that they stay in their home. But term life insurance. I mean, I'm paying, $1,000, maybe $1,500 per year on this term life insurance for the next 30 years. I don't want that $30,000 over 30 years to completely go to waste, that use it or lose it concern. I'm healthy. I think I'm invincible. Well, let's go ahead and throw a return of premium rider on there, which immediately removes that concern. It is your rebuttal to their objection. Hey, we've got something for you. If you do think that you are invincible, go ahead and bet on yourself. And with this return of premium rider only available on the 20 and 30-year term products, you're basically betting on yourself to outlive this. And once you do outlive this policy, you'll get all of those premiums back for the base premium and the return of premium rider itself, minus a $70 annual policy fee. So ultimately, after those 20 years, you're only out $1,400. After those 30 years, you're only out $2,100. That's a really strong conversation to have with an individual who's really, really confident in their life expectancy, and they're really concerned with that use it or lose it aspect of term life insurance. That's where that return of premium comes in really nicely. But on top of those mortgage protection plays, we just very basically see these in a ton of business planning. So whether it's a buy sell scenario, that kind of situation, maybe it's a key person type bonus executive or executive bonus type scenarios and solutions. Those are good options for business planning, because ultimately what you're doing is you're planning for a very set amount of time that you're either wanting to maintain this business partnership in the terms of a buy sell, or for how long you think that this key person ultimately may be working in general, either for your company or until their own retirement. That's where the return of premium can come in very nicely, because it kind of gives a little bit of an additional aspect of, okay, we have a very specific thing that we're trying to protect, very similar to a mortgage, essentially. We want to protect it for a certain duration of time. And then if we outlive this duration of time, then we actually get an influx of cash back to us through the return of premium benefit coming back at the end of that level term period. So that's where we play really nicely with the return of premium. But there's also one other market that we play specifically well in, and that is going to be the living benefit market. We have defined benefit riders for critical illness and DI. And defined benefit basically means they are not accelerated benefits. They are their own defined benefit buckets of money that could be paid out in the event of a critical illness or disability. So what you're seeing is, if you've got a $500,000 benefit amount on your base term life insurance policy, well, if I have a $100,000 critical illness benefit paid out due to a heart attack, that 500,000 stays 500,000 on the term life. If it's an accelerated rider with another carrier, then that 100,000 gets paid out, and that deducts from the actual death benefit amount, leaving you with only $400,000 now. And what does that kind of do? That throws your actual life insurance planning all out of whack then, because, well, you had $500,000 calculated to cover because that was the future school funding. That was going to be the future earnings replacement. That was, you guys use some pretty complex systems to determine the right amount of life insurance that someone should have. You don't want that to start being thrown off course because you start accelerating things from your policy if it is an accelerated critical illness or DI rider. Well, no, these are going to be defined benefit with our riders available on our term life. So 100,000 gets paid out for a heart attack, doesn't affect the death benefit. You have 2 years of paying out $3,000 a month for a disability rider. Well, that's never going to touch your death benefit. That's going to be 2 years of its own bucket depleting from that DI rider. Those are some real general, really foundational 10,000-foot view notes on all of our products. So now what we're going to do is we're actually going to go in and start illustrating the ones that you all are probably going to be using most. So we'll go ahead, and when you are illustrating, it's going to be a little bit confusing at first, but I promise you'll get used to it quickly. Life portraits illustrations. That is where you go if you want to illustrate our health products. Life Portraits is a software company and vendor. That's why they're named here, but it does not illustrate the life insurance products. You will want to go to Illustration Pro to illustrate whole life UL and term life. So we'll jump in there. It'll bring you pretty immediately just to a startup screen. Get your case started essentially. You'll see that I have kind of a library here of recent clients that I've written, recent illustrations I've done for other agents, and you'll have the exact same thing. You'll be able to basically go in here. You can search by 90 days, 7 days, whatever you need there, find somebody, find a recent illustration, and jump right back in where you left off. But you want to create a whole new one and you're starting off fresh. You'll go up here to the right, create illustration, create new client. We'll go ahead and do a John Smith here. We'll go ahead and make him just 35-year-old. That makes it pretty simple. Go next. Issue state. We'll keep it Alabama. Next, whole life insurance. We'll actually start with the term. I think that'll be the easiest one to start with, and then we can kind of get more complex from there. But we'll create the illustration now. It'll bring you up to basically the policy details setup page. You need a substandard, so maybe you've already done some preliminary underwriting on this client with us, and you can do that by sending an email to underwriting@assurity.com. Just give us some very general notes on, okay, he's a male, he's 5'11", 195 pounds, was diagnosed with type 2 diabetes 10 years ago, stable A1C scores, that kind of deal. Just give us a blurb or some recent levels and things like that that we should be taking into consideration. And underwriting@assurity.com. They'll turn around an opinion for you, a very preliminary, please include this email with the application type response, typically within 24 hours or 48 hours if it's a little bit of a longer record list that you've provided. Once you get that email back and you know, okay, this is going to be a table 2 client, you would go in here and next to class, substandard, you'd click the plus and it'd be able to come in here, add table 2 all the way out to what we offer at table 8. And you'd be able to add that by just clicking OK and it would lock it in. Same thing with flat extras. Maybe you're writing a pilot or somebody like that who's going to be maybe a $3 flat extra per thousand. You could enter that in here and again, click OK. Or maybe you entered something in by accident. You can click remove and that'll take care of business for you there as well. We'll just go ahead and keep this input phase versus input premium, 500,000. Pretty typical stuff if you've ever run an illustration before. I usually like to keep things monthly because that's usually how people are budgeting. I know that a lot of the systems that you all use that Josh has shown me definitely focuses more on like a monthly interest rate, a monthly payment, and that's where we do see most of ours run monthly as well. We'll switch this out to a 30-year, and then you'll come down to riders over here on the left where you can add the waiver premium. We are going to add the ROP here because I do want to show you how that looks on the actual illustration values. That's just if you want to get a quick snapshot and then report selection. This is going to be more beneficial to you on the permanent life insurance illustrations that I'll show you here in a moment, because you can add things like the internal rate of return report, the premium outlay report, things like that as well in this report selection. But to actually get it generated, you come over here to action, click preview illustration, and it'll pop up a new PDF window for you. And we'll kind of go page by page now to show you exactly how this kind of breaks down. So we've got very general page of 500,000 renewable to age 95, what your monthly premium is, what it looks like annualized, and then a 30-year term period. Conversion, I'll just touch on this since it just popped to me now, but conversions, you can convert I guess let me start there. It's a huge competitive advantage for us because we have extremely long conversion periods and we allow you to convert to our actual off-the-shelf products, our true whole life, our true universal life products that you would buy if you just initially bought them and weren't converting. Whereas we do know that a lot of our competitors nowadays have a conversion specific UL or something dumbed down a little bit that they're making you convert to. That's not us at all. You're getting our true whole life for UL. And the conversion period goes all the way out to the second of the last year on all of our level periods. So 30 years, that is going to be 28 years conversion period. A 20-year term, that's 18 years. So you can see that we're really lengthening that out for you to make those decisions, maintain that eligibility for permanent insurance if you're now no longer insurable, sort of thing. And it doesn't cost anything extra. That's another thing that a lot of competitors would do, maybe, is charge extra for an optional conversion extension rider or something like that. That's not us. We go ahead and give you all those great benefits and conversion options right off the bat. Then you'll come after that to the rider descriptions, and it'll always show you the accelerated benefits rider, but then it will go rider by rider that you've added. So if you add the critical illness, it'll show you the scheduled benefits there, the monthly DI rider, same thing there. But this is where it'll basically define and give you all the descriptions of the riders that you've included. Here you can see that when you include the return of premium rider, it gives you the amounts and the schedule right there. So we're taking what that annualized premium is, and we're basically going to be out $2,100 after that 30 years. That client can then call in, surrender their policy, and they can get a check for almost $51,000 if they've outlived this policy. That's a really nice chunk of change to be getting right when you're thinking about retirement at age 65. Another really valuable point for these folks in their 30s, when you're going and meeting with them, and at least presenting them with the return of premium option. Because what's really awesome about our illustrations is not just including that full return of premium schedule on the second page, but we itemize every single one of the riders on our illustration. So whether it's the critical illness policy and you're adding riders, or the DI policy, the whole life policy, or as you can see, the term life, we always have this page where every single piece and rider is going to be itemized. So it makes it really easy for you as the agent to go one by one and say, all right, here's the base premium. This is our starting point. For your $500,000 of death benefit is going to be right around $72. But if you want to do the return of premium, which ultimately could get you that $51,000 back if you have outlived your 30 years on this policy, that's going to cost you another roughly $75, $76. Does that show value to you? You're presenting it in very understandable terms to them, that this costs this, but this is what it gets you. So you can make the decision then to go ahead and purchase that additional rider, that option to enhance your policy. That's what we're given to you as an agent for a tool to make it easier to present these things. And quite frankly, you should probably just include the return of premium rider on any of the term policies that you kind of are showing with us at Assurity. Because if you don't show it, you won't sell it. And your clients probably don't know that it's an option that's available out there. So at least showing it to them, they may be, wow, why would anyone buy a term life that's not return of premium? That could be an eventual conversation and an eventual statement from one of your clients once they kind of see how affordable it is. And I did choose a 35-year-old male. It was actually intentional, because this is kind of our break-even threshold for how much the return of premium rider costs. It's going to roughly match what the base premium costs on our term life around age 35 for males. Preferred non-tobacco, it would be almost exact. It would be like $70 or $71. You'd probably get a few more years out of a female, probably around 38, 39 is where that break-even age would be, where the return of premium rider would match the base policy. Once you start getting older than that, it does start to rise, where probably around age 50 is where you're seeing the return of premium rider is about double whatever that base premium would cost. And then once you start getting younger than these ages, about 35 male, 38 female, it starts going way down, where someone in their age 28, age 29, they could see this being maybe $25 compared to a $70 base premium. And then if you're in the mid 20s, I mean, this can get single digits pretty quickly, where it becomes a no-brainer if you're talking about generational planning. So maybe you've done the planning and sold insurance to the grandparents and the parents. Well, now they've got adult children in their mid 20s. That's a good opportunity for you to go to them and say, hey, this return of premium rider, it's a no-brainer. It's only going to add maybe $8 to $12 a month onto your $500,000 policy. So that's kind of how that works from an illustration standpoint. I'll dive into a real quick show of how to take a client and do a new illustration on them. And this time we are going to do the whole life. And we're going to go ahead and make this one. Yeah, we'll make this one just a pay for life just to kind of show you how the illustration system looks here. Very similar layout and everything. You're still looking at substandards, switching this between our 5 different options of classes. We'll run this one a preferred non-tobacco. And then what you want to do best practice here. So if you are just very simply looking to maximize cash value, maximize the death benefit accumulation as well, you are going to want to put input premium for max cash value accumulation. What this is doing is it is basically taking your paid up addition rider and it's automatically calculating the maximum that it can push there without becoming a modified endowment contract. That's really the easiest tool for you when you're trying to maximize those PUA riders is to just come in here on the very first page, input type, and input premium for max cash value accumulation. And then you are putting in whatever that exact monthly premium is that you're trying to do. So maybe it's a, roughly 3,000 or so per year or something like that, and we're doing $250 monthly. That's probably a pretty good ballpark for what our market typically is someone looking in kind of that $250 to $500 per month. We've got the dividend option down here set to paid up additions, obviously, because we've already selected the input premium for max cash value accumulation. But say you were inputting premium or just inputting a phase solve for premium type, well, this would also give you the options to pay out in cash, pay premiums. All of those options would definitely still be available here in the dividend options. But because we chose this max cash value accumulation, that's where you're seeing we're looking at about automatically locked in at paid up additions. Riders you would add in here. Again, pretty obvious options here. Guaranteed insurability rider for your juvenile type policies. Very common for those juvenile policies. Cash flow, this is if you actually wanted to go ahead and show withdrawals after maybe a retirement age type calculation, insert loans. We'll go ahead and keep this one simple and not actually illustrate these right now, but this is essentially how you would do it. You would do input or maximum or 2 cost basis are your 3 options for withdrawals. You can input amount that we just want to pull out, 10,000 for 5 years, something like that. And then it would go ahead and it would do that for you. You could also assign that as a premium payment. Whatever you want to do there kind of gives you those options. And then you could insert loans, you could insert loan repayments, and it's all very similarly formatted there. It's something that if you are kind of in those markets and you enjoy messing around with illustrating and projecting out those withdrawals and everything, again, give me a call, send me an email. We can work through that together and get you really brushed up on how to maximize how those look and make them look as appealing as possible. Premium deposit fund, if you have one of those cases involved, that's some pretty complex planning though. So that one I definitely recommend giving me a call on before you start diving into the system. And then the report selections, like I was talking about earlier, I always include the internal rate of return. It just makes it the absolute easiest for a client to determine the benefit of the policy. And then you go same as the term life illustration. You just click preview illustration and it'll go ahead and it will generate that illustration for you. We're looking at the very, very similar type formatting on the first page. We're talking about just general information, what a guaranteed column is, all of those kind of definitions like you typically would be used to on an illustration. Because I can already foresee it being a question. No, we do not publish our dividend rate of a 4.20% on here because it is a little bit of a misconception when you're comparing our dividend rate just up next to side by side with maybe a one of those much larger mutual companies, because that doesn't entirely tell the full story. That's why you want to include an internal rate of return report, because while they may have a much higher stated dividend rate is only one thing that goes into that particular calculation. As a middle-sized carrier, we have much lower administrative fees, less drag from those type of policy fees and those types of things, which allows us to maintain a very competitive product versus someone who may be stating a dividend in the high fives or low sixes. So you're seeing all these numeric summaries, and then that finally gets us to our actual ledger itself. You can see that with this maximize cash value accumulation play, pumping a ton of the premium into that paid up additions rider. That's what this is up here. You can see that it does start out with a very low initial death benefit, but we are building up a lot of paid up insurance right away, which is essentially leads to a larger dividend being credited, so that by the time that they're age 50, they've got a good 50,000 in here. And then by age 65, the retirement, they've got a good 140,000 in here, with still having roughly 300,000 of death benefit that has kind of developed over time. So those are the real general, generic kind of best practices when you're illustrating our particular products for both whole life and the term life. So I really think from there, that gives you guys enough foundational knowledge, enough know-how of how to navigate the actual site, what reports to add and everything, that'll make it dangerous to start out here. At least get you started playing around in the system to run those illustrations and everything. And then as far as universal life, there's really only, whoops, I don't want to close client, I want to create illustration. There's really only one additional step that you need to consider when you're doing the UL. First, always keep it the guideline premium test. That's always going to give you your best results. Create illustration. And then the main thing that you want to do here is we'll keep it on that preferred non-tobacco. You want to just start out with a general, let's see. Oh, that's not where I wanted to go. Sorry about that. I want to input the face amount that I'm solving for. So let's just say that this is a $350,000 universal life face amount that we've determined. And now we're just trying to figure out what that premium is. But we want to maximize the longest guaranteed period that we possibly can on this product. That's what I've kind of talked to the client about. It's a really good product for lower premiums, but being able to lock in a long-term guarantee out to age 90 and also see a little bit of upside from that current assumption rate being credited to the policy. So what we're going to do first is we're just going to run the minimum premium option after inputting whatever face amount that we want to see there. Not really messing around with any riders or reports besides adding the internal rate of return. We're just getting started with seeing what that minimum premium option is. Preview that illustration. And what's the most important thing that we're getting out of this particular page? So we're coming down here and we're trying to find this number, the required premium for guaranteed coverage. And this is where you will find the necessary annual premium in order to guarantee this out to the maximum, which is that age 90. So now I'm taking that 52.9909, dividing by that 12. So that is my monthly premium that I'm basically locking this in at. Is I'm gonna put that in at 441.59 now, switching this over to actually input monthly mode 441.59. And now going back, previewing that illustration. And this is the actual illustration that I'm now actually selling to the client, because this is going to have that long-term guarantee with the upside that we've talked about. Some other things about this UL, we have enhanced guaranteed surrender value options in the 15th year and 20th year. you can basically get a full return of premium in the 20th year. And in the 15th year, you're looking at more of like a 65% return of premium if the client essentially says, I want to get out of this policy. I need this money instead of going monthly to this insurance policy. I need it doing something else. So how do I get the most money back for my policy? You do have these enhanced surrender value periods at 15 and 20th year. But where we're getting to is the actual ledger itself. And that's where you can see the guaranteed basis on the left keeps that 350,000 all the way out to age 90. That's the very conservative, keeping the guarantee, having that peace of mind for the client out to age 90 that they have at least 350,000 waiting for them all the way through their 80s. But what we're really selling it on is this number, looking at about double that initial death benefit of 350,000 right around life expectancy of 85, 86 years old. That is where the sale really lies, along with tying that into obviously the longer you live, the more rapidly that grows. If you make it into your 90s, you're getting maybe 3 times that amount that you initially applied for. So that's again just kind of your best practice for the universal life. And then they're all going to be applied for the exact same way. These life insurance products, you just go into quick links on AssureLink, click on eApp, and basically if you've submitted an electronic application in the last 20 years, this should look familiar to you. Good old iPipeline. You just go in, start a new case, and it's going to be the exact same process that you've used in the past. You'll select your state. If that product is approved in that state, it'll pop up right here in the product type, term life, universal life, whole life. I'll just kind of show you those options first. We do have a tele app. So if you are really running and gunning and you just don't have time to fill out the entire applications and that's not something of your process, well, we do have a tele app. I do need to mention though that it is reduced comp because we're taking on a little bit of that service ourselves, offering that telephone interview to complete the app for you. Universal life, you'll see it's just the one option, makes it easy for you. Whole life, you'll only see kind of those 3 options. We do a tele app for the single premium as well, but you've also got the full single premium whole life app and the full whole life app itself. And that would be for if you're doing the 10 pay, the 20 pay, paid to age 65, full pay, they would all be right here and you just select and get on your way. So that's really all I had for you all today. I know we went pretty fast and furious across each of the product niches, how to illustrate them with best practices. But please, as you start to get these opportunities and you think that it might be an Assurity case based on what we've talked about today, give me a call and we can verify that for you. I do not like wasting your time, clients' time, Josh's time by giving you all a bunch of fluff about, well, yeah, no, we can make that work. Or, yeah, no, I will tell you straight out, this is not our market. This is where we play best. I want to basically develop a script for you where it's instinctual, where you see this, think Assurity. Business owners, think Assurity. Return of premium, term life, think Assurity. It should be that easy. Been working with marketing to come up with some like, some koozies or some table holders or whatever, but they haven't built them out yet for me. Working on it still. So Josh, anyway, if there's anything else that you want me to cover, let me know. Otherwise, that's really what I had for you.
No, that's great, Mike. That's exactly what I wanted. The main thing is just get everybody some initial ammo to go start selling some stuff, and how to quote it. If you've never worked the actual process of actually writing a policy, it's super simple and easy. Just follow the instructions on the screen. I mean, it's that easy on there. But if you have issues, call our office. We'll help you with that. We'll do some separate training on the product where we'll get real deep in the weeds on a lot of different things. In the meantime, if you have questions about it, reach out to us and we'll get those questions answered for you. So, Mike, thanks so much for your time. We're gonna get going with it, man, and hopefully everybody write a bunch of business.
Exciting stuff. Looking forward to it, Josh. Thanks again for the opportunity.